just put in the chat where you can hear me or not. All right, let's begin. So you can hear me, right? Okay, so let's start. So today we are going to do like one of the important lessons, which is percentages, right? So grade 10 and 11 syllabuses both will be covered. So please stay until the last meeting. And since it's a 3 hour seminar, it might take a bit long, but it's worth it because like you have a lot of content that we can cover. So stay until the last moment. We can start it now, right? First of all, let's see what percentages that we are going to discuss. Sorry, give me a minute. Okay. So in grade 10 and 11, you can see the tute that we are going to start the lessons, and we are going to cover rates, then custom duty, income tax, VAT, and simple interest. Okay. So these lessons are from grade 10. And 6 and 7, which is the calculation of interest based on the reducing balance, and compound interest will be on grade 11 parts. So let's see our first page. So you can turn to page number 2 here. So it says we study percentages into two types in O levels. So they are taxes and interest. So under taxes, you have 4 types. One is rates, then you have customs duty, then you have income tax and VAT, so which we will be learning in grade 10, right? And then interest. So we have 3 types of interest that we are going to learn. So the first one is simple interest. So simple interest will be learned in grade 10. Okay. And then we have 2 more interests, which is remaining, and they are compound interest and interest, which is calculated on the reducing balance, which will be learning in grade 11 parts. So we will be learning all these ones within this seminar. So please stay until the last moment, and I hope that you would stay until the last moment and cooperate to do a good seminar. Let's start. So grade 10 percentages. So you can look at the tute that we have shared it. So first one is first one, it has taxes, right? Taxes. The government of each country collects money from its citizens to meet recurrent expenses, and they are called taxes. So now we know, right? Now normally, now we are living in Sri Lanka, so we take a service or we kind of buy any kind of product, but normally we just don't just pay the raw amount of that, right? We have to pay a certain like amount to the government, and that's what you call as taxes. So there are two types of taxes that we are going to learn. So one type is called the direct taxes, and the second type is called indirect taxes. So under direct taxes, you have examples like rates and customs duty, income tax, etc., where those taxes are charged for you like directly by the government. So they say that these taxes are charged for you. And the next type is called indirect taxes. So some examples for taxes of indirect taxes are VAT. So I hope that you have known about these tax types called VAT, which is called as the value-added taxes, right? So normally all products or all services that we have in Sri Lanka, we normally get charged by this VAT. So I hope that first part is clear to you all. And if you all have any questions from that part, you all can ask now. Right. So no questions, right? Okay. Then let's go for the first part of taxes that we are going to study. So income tax. So income tax here is a direct tax, right? Now, what is income tax normally? Now the name itself says, right? So the name itself says the tax is based on a person's income. Now for example, now let's say now a person earns about 100,000 salary. Now he normally doesn't take the entire 100,000 to his house. Why is that? The reason is because the government imposes a tax on him, where for his income he's been charged. Thereby, now let's say for example, like about 10% or 5% of his but income he has to pay. So therefore, he cannot take the entire 100,000 to his house. He has to pay a certain tax with income tax, and the balance only he can take to his house. Let's see this. So income tax. The government imposes a tax on the annual income of an individual which is earned as salary from property or through a business, and which exceeds a certain limit. Such taxes are called income tax. Now let's see a small example for income tax. Now in this table, you can see that now if a person's like annual income, right? Let's say is about 100, let's say is about like 1 million, let's say. So that means 10 lakhs, right? So he has to pay, so he has to pay a certain amount for the income that is earned. So let's see regarding that in the next page. So here you have the table here. So page number 3. Using the above table, so let's say if a person's income is 1.4 million, then the income tax that he has to pay can be shown as follows. Now see the board. Right, now see at the board. Right, now we know that the person's income, right? The person's income, we said here is 1.4 million, right? 1.4 million. Now the table, now look at the table in page number 2. Look at the table in page number 2. It says the first 500,000. The first 500,000 is free, right? Then the next 500,000, look, it says next 500,000, there is a 4% interest, sorry, for a 4% tax charged on this income. And then the next 500,000, they have said it has 8%, and so on it goes. Now, first of all, we have to divide this income into 500,000 groups, right? Now look at the board. So 1.4 million. You can divide it like this. 500,000 plus, then 500,000 plus 400,000. Now see this. 500,000 plus 500,000 is 1 million. Then this 1 million plus this 400,000 will give you 1.4 million. Now in this table it says the first 500,000. The first 500,000 is free. That means for this 500,000 you don't need to pay a tax. So it's tax free. Tax free. Right? Now this is the second 500,000 he has. This is the second 500,000 he has. Now for this 500,000, he has to pay a 4% tax. He has to pay a 4% tax. So for this one, he has to pay a 4% tax. 4% tax. Then in this class, he has only 400,000, but still he's in this category, right? Because he has 500,000 plus 500,000 plus 400,000 is in this category, right? So he has to pay this amount. So he has to pay this 8% tax. This is what he has to pay. So the total tax he has to pay is, now this 500,000 is 0. Why? Because he doesn't have to pay. He doesn't have to pay that. For this one, he has to pay. Why? Well, first 500,000 is free, right? Second 500,000, you have to pay a 4% tax. So therefore, 500,000 into 4% tax. Second one, for the second 500,000. Then for this category, he has passed 400,000, which is in the category of the next 500,000. He has to pay this amount of 8% of tax. Now we have to simplify this. So 500,000 into 4%, we can get it as 20,000 plus 400,000 into 8%. In this one, he has to pay 32,000 plus 0. This one he doesn't have to pay. So what's the total tax that he has to pay? 20,000 plus 32,000, which is 52,000 rupees he has to pay as income tax. So I hope that you can understand this one. Okay. So, but if you can understand, this one, you can ask any problems regarding this section in income tax. If you can understand the method or whatever, just say in the chat if you can understand. No questions, right? Okay. So we can move on to page number 3. Look at page number 3. So it says, using the above table, well, let's say if a person's income is 1.4 million, then the income tax that he has to pay can be shown as follows, and it's there here. As at first, the 1.4 million can be separated as first 500,000, second 500,000, and then rest 400,000. And according to the table values, first 500,000, it's tax free. Then the next 500,000, it's 4%. And the next 500,000 is 8%, but he has only 400,000 in this category, right? Okay. Then the actual amount that the person has to pay as income tax is, the first 500,000 is free, plus the next 500,000 he has to pay 4%, and 4% of 500,000 is 20,000, plus the remaining 400,000 he has to pay as 8%. Why? Because he has in this category of this next 500,000. So he has to pay what, 8% for this one. So the total tax that he has to pay now is what, 20,000 plus 32,000, which is 52,000. Right. Then it says a note. Note says what, like only the required amount in excess of the person's income should be paid as income tax. And we have seen that, right? Because now here you have the first 500,000, then the second 500,000, and you can't write the third 500,000 because why? Because he has but because he has only 400,000 as excess in the third 500,000 category, right? So he has to pay what, only the remaining amount, which is 400,000, not 500,000. Okay. So I hope that there are no questions in this section. And if you have questions, you can ask the questions. Problem. Right. Next section, rates. Rates are taxes charged by urban councils and municipal councils and provincial councils from households and businesses that come within their administrative domain. These taxes are used for various purposes, such as maintenance of roads and street lights, garbage collection and disposal, etc. And properties owned by individuals and businesses are being assessed annually by the government, and the relevant council charges a percentage of the assessed value of the property as rates, and is calculated annually and can be paid in total at the beginning of the year or in 4 equal quarterly installments once every 3 months. Right. So here you have an equation which you have to by heart this. Rate equals the value into rate percentage, right? Rate equals the value into rate percentage. So let me give us more introduction on rates. Normally, let's say like these councils, right? So you have these provincial councils, then you have these municipal councils, stuff. So they charge a small percentage as tax uh, for using their resources. Now, for example, now you live in Sri Lanka, you live in your property, but you can't just live for free. Why? Because they come and they make an estimate for your house. So for that amount, you have to pay a small percentage for living in your house, and that's what you call as rates, right? Okay. Right. So move to the page number 4 in your queue. So you have an example for rates there. You can see that. So the example one says, if a property worth 100,000 is charged with 6% rates, what is the value of the rates that the house owner should pay? Since the value of property is 100,000 and the annual rate percentage is 6% charge, so we know the equation. So the equation for rates can be derived from this one. So the equation for rates is rate equals the value times the rate percentage. So we can use this equation and write rate equals the value times rate percentage. So the value here is how much? So it's worth 100,000 into rate percentage is 6%. So you can multiply this and get the answer for rate as 6,000 rupees. Second example. Second example says a house of assessed annual value 36,000 is charged as rates of 4%. So part one says, but calculate the annual rate. Rate equals the value times rate percentage, and you can calculate that as well. So the value here is 36,000 and the rate percentage is 4%. So the rate that he has to pay is 1,440. You can just apply the equation and get the answer as a rate. So these are like kind of easy questions in rates. Just they ask the equation and then they give some values. You have to find the rate. Second one they say, and they say what to calculate the quarterly rates. So what do you mean by quarter? Quarter means the 1/4, right? 1/4. Now this rate is charged for a year, 4%. Okay. So in the example they have said 4% is what rates? The 4% is the annual rate, right? So now if they ask the quarterly rate means quarter rates means it's the 1/4 of this percentage, right? So you have to divide the annual rate over 4 to get the quarterly rate. Now see, now in the first question here, you found this 1,400 rupees for the rate as the annual rate, but they asked for the quarterly rate in the second question. So you have to divide this one by 4 to get the quarterly rate. Why? Because the quarter is 1/4 of the year. So I hope that you can understand that as well. Simple ones. So these ones are simple. So here, rates is a very simple unit. It's not that big, and they won't normally ask so much questions in rate as well. They ask yes, but rarely one or two yes they ask. But in simple interest and also in income tax, you have a lot of questions. So I'll be giving a lot of questions in this seminar as well. So please stay like until the last one. So do you have any questions in that? Just send me in the chat if you have any questions or not, because I don't see anyone uh, commenting on the chats. Yeah. Good. Okay, sir, I have a doubt in income tax. Okay, okay, no problem. No problem. Because just like we did a small like demo in income tax, but we'll come for the questions. Don't worry. We have income tax questions in this. So since I'm like having just 3 hours of time, so my plan is to cover the theory first and then do the questions, because then we can cover all the theories and then I can do at least 4 or 5 questions and give the rest of the questions as homework. So that's my plan to do it for both grade 10s and 11s, both ones. Right. The next part here is customs duty and VAT. Uh, so customs duty. So do you know what customs duty means? So I think that you know this institution called Sri Lankan Customs, right? So in Sinhala they say Sri Lanka Reg. So what happens here is like when you bring some goods uh, from another country, they have a quota for it. Means that like they say like this amount of mm, uh, things or goods you can bring it from another country to Sri Lanka. But like beyond that quota, like if you want to bring that type of good, you need to pay a tax to the customs. That is what we call as customs duty. Now, for example, we know that in Sri Lanka normally we import gold and then we import smartphones and all those things. So we need to pay a tax for the customs. So for the final price of the gold or the phone or whatever it is, you need to pay with the customs duty to the business, because they what add all these expenses to their final price. That's why the normally when you get the smartphones and all, normally when you buy the normal what do you call the smartphones, the price is like too high, right? But the actual price of the smartphone is really low. So why is it high? Because you have a lot of taxes to pay, like including VAT and customs duty. So that's why the price of the phones normally are really high. Phones, cars, whatever it is, you need to pay a customs duty and VAT value also for that. Right, let's read this. So customs duty and VAT. When certain items are imported or exported, a certain percentage of the value of the item has to be paid as taxes to the government. Such taxes are called customs duty. This tax is charged by Sri Lankan customs. So I said you that this tax is charged by Sri Lankan customs. So customs duty, we have two equations here. So customs duty value equals the initial price times customs duty over 100. And final price with customs duty equals the initial price of the item into customs duty plus 100 over 100. So these two equations also is better if you can why it's better if you can memorize these two questions, because sorry, these two equations, because these two equations might help you to find the customs duty value very easy. Right now you have to write the value and then find that value, then add it to the next one. It here by the business. So these two equations, like you have in mind, you can just apply the equation and subject the question that they ask, and then find the value. We'll do questions, no problem, because we have a lot of questions. So don't worry. But this is just the theory part. So I'll be explaining all the questions that we are going to do, and we'll be discussing all these questions on board. So don't worry. So this VAT, right? When a product or a service is bought, when a product or service is bought, a percentage of its total value is charged as VAT. So what is VAT? VAT is called as value added tax. The trader who sells the product and the service provider, who are both bound to pay this tax, charge it from the consumer. That means now normally, like as I said, Now the government imposes a VAT on certain items. So the business person, he'll charge it from the consumer because for him that's an expense, right? Because he has to pay some value to the government, so he has to charge that back from the consumer. So that's called as VAT, the value added tax. So for that also we have two equations here. VAT value equals the initial value times VAT over 100, and the final value of the product or service with VAT equals the initial value times VAT plus 100 over 100. So these two equations are it's like better to keep in your mind because this will help in question. You can see that in future. But in another 40-50 minutes time, we'll do questions. So in these ones, you can see that these equations will help a lot. Right. So if you have any questions regarding that, you can ask. Since this is a percentage seminar, so I won't just go deep into all the theory parts. Just I'll be teaching the main equations and stuff, and some simple methods. So, but we'll be doing questions, right? So the main part in maths is you need to know the theory plus do a lot of questions, because the more amount you do more questions, the more fluent you will be in that particular part. Let's see an example for that, right? So the first example says when a motorbike worth 600,000 is imported from Japan to Sri Lanka, the Sri Lankan customs charges a custom duty of 40%. Find the final price of the motorbike with the customs duty included. Find the final price of the motorbike with the customs duty included. Now they ask the price. So they ask the price of the motorbike with the customs duty. So which equation should be used from this customs duty value? Now in these two equations, which one should we use? We have to use this second one. Why? Because they ask the final price with the customs duty, right? So we have to use this equation, the second one, to find that particular question. So the final price with duty is equal to the initial price times custom duty plus 100 over 100. So the initial price here is 600,000 times the customs duty rate here is 40% plus 100 over 100. So you can simplify this one. You get the answer as Rs 840,000. So this is the value with the customs duty. Now you can see here, right? Now the price of the motorbike when it was imported was 600,000. It is a like kind of a relatively low price. But when it comes to customs duty, and after you pay the customs duty, the final price will be 840,000. That means how much is the difference? 240,000 you have to pay as customs duty. That's why you get all the price of these vehicles and smartphones and things really high, because you need to pay these duties to the Sri Lankan customs. Understood? Let's go with second example. Second example says, a person's bill in a restaurant included 5,000 for food with service charge, 5,000 for food with service charge, and 12% VAT. Now this example is related to VAT. Find the final bill the person has to settle to the restaurant. Now it's simple. You go to a restaurant, you have a bill 5,000, and they say this 5,000 is for the food plus service charge, and also they say in the bill that you have a 12% VAT being added into this price. So they ask to find the final bill the person has to pay with the VAT. Now they ask the price of the final bill with the VAT, right? Now in the two VAT equations, which equation should you use? The first one or the second one? They just don't ask the VAT value only, but they ask the final value of the product or service with the VAT. So you have to use this equation, the second equation, right? So once you use the second equation, you can see this in page number 6. Final value with VAT is equal to the initial value times VAT plus 100 over 100. So here they say that the bill price how much? It's 5,000, right? Yes, it's 5,000. Times the VAT percentage, they have said as 12%. So here VAT is 12 plus 100 over 100. So you can simplify this and get the answer as 5,600. So this is the amount that the person has to pay for the bill with the VAT. Final value with the VAT. The bill with the VAT is 5,600. So I hope that you understood these two examples. Yeah, so we have the questions next. But if you have any questions regarding up to now what we have done, like in customs duty or VAT or in rates or in taxes, you can ask now, because now we are going to go for questions. Okay, so I hope no questions regarding the previous sections. Right, so we can do the questions. So first of all, do these questions. So mark down these question numbers. Do the first question, right? So do the first question here. Then do the fourth question also. First question, fourth one, fifth one. Mark these numbers. And the equation. First, do these four questions. First question, then fourth one, fifth, and eighth question. So start doing this in some paper, but if you have a book or something, you can write there as well. So do these four. First one, fourth, fifth, and eighth question. So I'll give you about 15 to 20 minutes. Start doing this, and then we'll discuss at 11:40. Okay, children. Right, we can start discussing. Okay. So I hope that you all have finished these questions. First, fourth, fifth, and eighth question, right? I gave 4 questions to do. Right, let's start discussing this. Right, time's enough. Right, look at the first question. So the first question says the following shows how income tax is charged by a certain government, right? So this question is based on income tax. So they say the first 50,000 is tax free. Okay. The second 50,000 is 4%, and the third 50,000 they say it is 80%, and for 50,000 12%, and for excess income 15% tax is charged. Let's go for the question. Question says, but if there is a person with 250,000 income, 250,000 income, find the followings. Right. First question, first part. The income of the person is 250,000, right? The income of person is Rs 250,000. Okay. Now they have given a chart in 50,000 clusters. In 50,000 clusters. That means you have to divide this sum into 50,000 parts. Into 50,000 parts. Let's divide this. 250,000. You can divide this into 50,000 parts as 50,000 plus 50,000, 50,000 plus 50,000, 100,000, then plus 50,000, it becomes 150,000, plus again 50,000, so it becomes 200,000 plus 50,000. Now it becomes 250,000. Now in the chart they have given the first 50,000 is tax free. That means you don't need to pay a tax for this. Understood? You don't need to pay a tax for this first 50,000. Second one, second 50,000, they say you have to pay a tax of 4%. Third 50,000, you have to pay a tax of 8%. Fourth 50,000, you have to pay a tax of 12%, and the excess ones you have to pay 15% tax. Right. Part 1. What does it say? Part 1. Right. So find the tax pay for the first 50,000. For the first 50,000, the tax is free. That means he don't need to pay taxes. The first 50,000 is tax free. These are first question's answer. Part 1's answer. Part 2. The tax pay for the third 50,000. For the third 50,000, this is the third. This is the first one, second, third. So third 50,000, he has to pay how much? 50,000 into what? 8%, right? So the tax for third 50,000 equals 50,000 times the percentage is 8%. You can get the answer as 4,000. This is the third 50,000's answer. So the tax for the third 50,000 is 4,000. Then the third part, they ask to calculate the total tax. The total tax. Now, how to calculate the total tax? You have to add all of these taxes, right? The first 50,000 is free. You don't need to pay. But the second one onwards, you have to pay. Let's see the total tax. From this one, how much? It's 0, right? You don't need to pay You don't need to pay taxes for this because why? It's free. Second one, second 50,000, you have to pay 4%. So 50,000 into 4% plus the third 50,000. Third 50,000, we found it here. How much is 4,000, right? The third 50,000 tax amount. Then the fourth 50,000. 50,000 into 12%. Then the next one, this one, 50,000 times 15. 50,000 times 15. So you can work out this sum here. Finally, you can get the answer. Here you get 6,000 here. Sorry, you get 2,000 here. Then here you can get 4. Now here it's already 4,000. We calculate them. In this one you can get 12 times 5 is 6. So 6,000 here. Here you can get 15 times 5 is 75. That means 7,500 here. So the total tax he has to pay is 0 plus 2,000 plus 4,000 plus 6,000 plus 7,500. The answer will be R is 19,500. R is 19,500. This is the answer for the third part of the question number 1. The third part of the question number 1. The answer is R is 19,500. Okay. So I hope the first question, you all don't have any questions. If you have any questions, please ask. No questions, right? Okay. Then I gave question number 4, right? Yes, question number 4. Let's discuss question number 4. Right. So question number 4 says, what a house of the assessed value RS 24,000 is charged as rates of 8%. Okay, the annual rate is 8%. So the assessed value, for question, the assessed value is how much? Assessed value means the estimated value is 24,000. And they say that they charge a rate of, the annual rate is 8%. The annual rate is 8%. Calculate the rates that have to be paid for a year. So they have given the annual rate. So we know the formula, right? So the formula is here. We saw the formula for rates. Rate equals the value times rate percentage. So that's a formula. So just put the formula and get the answer. Just one direct questions. Rate equals the value into rate percentage. The value is how much? 24,000. Rate percentage is 8%. You can simplify this. The answer will be 1,920. R is 1,920. This is the answer for the fourth question. This is just a simple question because like these type of questions will be asked in part 1 because these like small questions you can get a lot of marks. Now these type of questions they might ask in part 1 years, but in part B, in part A and part B are two, right? So in part B they might ask this question as a full question. This one, right? So in this part, it's a bit difficult in the sense it's not difficult, but you have to take a lot of time to do this one. But these questions, fourth question, it's a direct question. You can just put the equation and get the answer. Simple one. So the answer for the fourth question is 1920. Okay, right. Then I gave fifth question. So you can take this down if you haven't written this. It's a simple one. Then I gave question number 5 to do. Question number 5. The annual value of Ranjit's house is assessed as 24,000. Now it's a rates question. The Pradeshya Sabha of the area charged 480 for a quarter as rates. Important point. For a quarter as rates. Remember this one. Quarter as rates. Quarter. So the assessed value means the estimated value is how much? They say RS 24,000. 24,000. And the Pradeshya Sabha charges quarterly rates. Quarterly rates is 480 rupees. Rupees 480. Now quarter means what? Now I said that. Quarter means 1/4. Quarter means 1/4 of the year. Right? Quarter means 1/4 of the year. So what this quarter amount is only 480. Then to find for 1 year, what should you do? You have to multiply this value by 4 to find the annual value of the rate. Understood? Because they have given the quarterly rates for this. A part. What is the annual rates charges? Quarterly rate is RS 480. Then the annual rate means the yearly rate, the rate for a year. You have to take this and multiply it by 4 to get the answer for the year. So the value will be 1920. RS 1920 is the annual rate for the A part of fifth question. Understood? B part. Find the percentage of rates charged by that Pradeshya Sabha. Find the percentage of the rates charged by that Pradeshya Sabha. Now, how do you find the percentage? This is also kind of a direct question. What should you do here? Simple as that. Just put the equation. So what's the equation? For rates, we know the equation. Rate equals the value times rate percentage, right? Yes. Now we calculated the rate value. Here it is. The rate value we have. The annual rate value we have. So we have this value. And then we have the estimated value as well. Here, 24,000. We have this value as well. Now they are asking for the rate percentage. Find the percentage of the rates. Rate percentage. So we have to find this value. What should you do? Subject rate percentage in this equation. So once you subject this rate percentage equation, here it forms as rate percentage equals the rate over the value. Over the value. And since it's percentage, make sure that you multiply it by 100. Why? Why? To find percentages, you have to multiply this equation by 100. Keep in mind, to find all percentage sums, you have to multiply this by 100. Right. The rate, we have calculated this one. So the annual rate here is 1920. We know that. Over the estimated value here is how much? 24,000. 24,000 into 100%. Then you can find the rate percentage. So you can cut zeros here, 2 zeros get cuts here, and 1 0 get cuts here. So it's 192 divided by 24. The answer, you can divide and see, the answer is 8%. So the rate percentage is 8%. Just subject, just use the equation and subject rate percentage in this equation, you can find the value. I hope it's clear. Simple question still. So once you know the method, you can just apply the equations or do whatever, and you have to know the method first, right? First of all, you have to know the method. Once you know the method, you can apply the equations, subject it, find the value. Right. Then we have discussed question number 8. Question number 8. Come to question number 8. So question number 8 says the value of a car which is being imported is Rs 2 million. The customs duty that has to be paid is 45% of the value of the item, right? So this is a customs duty question. Now we have two equations in customs duty. Keep in mind that we have two equations in customs duty. Where is it? Yes, here. So you have two equations in customs duty. You have to select which equation fits the one and apply the equation. Right. So the value of the car, they say, the value of the car, the initial value of the car, let's say, because it's the first value, right? Because once the customs duty is been added, the value of the car changes. So the initial value of the car is 2 million. 2 million. Then the customs duty, the charge is 40%, right? 45%. 45%. Let's go with first part. Part 1. Find the amount that has to be paid as duty. So they ask the value of the customs duty. So from these two equations, which equation should you use? The first one or the second one? So they just ask the value only. Means first for the second one. The first equation, this equation. Customs duty, customs value equals the initial price times customs duty over 100. This equation we have to use. The value equals the initial price times the duty percentage. So the price is 2 million. Duty percentage is 45%. 45%. You can get the answer for the custom duty value as how much? 9 lakhs, right? Yeah, 9 lakhs. 9 lakhs or 900,000. This is the value. This is the customs duty value. Part 1. Part 2. What is the value of the car after the customs duty has been paid? Now, this is the raw amount, but this is the exact amount of the car. And this is the custom duty value. Now, to find the final value of the car, what should you do? Add both of these. New value of the car. New value is 2 million plus is 900,000. Answer is 2.9 million rupees. Third part. It says, but Rs 10,000 is spent for traveling. Is spent for traveling into showroom and for the other expenses. Now, what is the value of the car? Right. Now we have this value. Now this value includes the customs duty and the customs duty and the value of the car. But now they say there is an extra expense. There is an extra expense. So what's the extra expense? The traveling cost for the showroom. Now again the value changes. Now for this new value, we have to add, for this new value, we have to add the traveling cost also, the traveling cost plus the traveling cost also, traveling cost, 2.9 million plus. What is the traveling cost here? They're given that Rs 10,000, 10,000. Now the value of the car changes again, and it comes Rs 2.91 million is the answer. You can add these both and see the answer will be 291 and 4 zeros. This is the answer. 2.91 million. This is the value after this one and the traveling cost. This is the answer. So I hope that you can understand this one. And if you have any question, just comment on the chat and ask a question. Fourth part. It says if the profit percentage which is expected by the seller is 25%. Now he expects a profit of 25%. Find the value of the car that should be sold. Right. Now we have the value of the car. After he pays the customs duty plus the traveling cost, we have the value. Now still the seller won't just sell into this amount. He just won't sell the car for this amount. Why? Because he needs a profit, right? He needs a profit. So he expects a 25% profit from this. He expects a 25% profit from this. Means the selling price of the car is this value, the new value that we had, 2.91 million, into the profit that the seller is expecting is how much? 25%. That means we have to find with the profit, right? Means you have to add 100 to 25 and divide it by 100. Now, what now this one is an equation that you have studied in grade 9 as I guess, because you found the profit percentage there, and you can find the value with the profit percentage. Again, you have the value of the car, and you have to find the profit 25%. So you add 100 plus 25 over 100 to find the value of the car of the selling price with the profit, 25%. So here it be 29100, so 000 into 125 over 100, because you find the profit also with this. Two nine one double zero. That means 29,100 times 125. The answer you get is RS 3637,500. This is the selling price of the car after the profit percentage. After the profit percentage. I hope that you understood this one. Just a tricky one. And if you have questions, you can ask. Just don't stay just because if you have any questions, but it will be difficult to go for the next part. So if you have questions, please ask in the chat. Okay, no questions, right? Okay. So the rest of the sums in this question, that means question number 1, sorry, 1 we discussed, right? Question number 2, 3, 6, 7, and question number 9 and 10. You can do it at home, right? So those are sums from the above lessons that we have done, from customs duty rates, then VAT and those stuff. Okay, so you can do those questions at home. All are good questions and all are past paper questions. So try those questions at home. Right. Now we are moving to the next part, simple interest. Since this is a seminar, right, I won't go much into theory. As I said, just teach all the main points and do questions and some short methods. So a main important part is the short methods and equations of those ones. Simple interest. Look at the tute. So it says when calculating the interest for a specific period, if only the initial amount or principal amount is taken into consideration, then such interest is called simple interest. So now simple interest normally when you go for a bank and you deposit certain sum of money in the bank, they say all that they charge a simple interest yearly of this much percentage of 2%, 4%, whatever it is. So those type of interests are called simple interest. So there's an equation for simple interest. Just remember this equation, it's a very easy one. I equals PTR over 100. This is an equation which you have to remember in simple interest. Just one equation, that's it. Right? I equals PTR over 100. Now what does I mean? So here, I stands for simple interest. Simple interest value. P stands for the principal amount. Principal amount means the initial amount. Principal amount. The initial amount. P. T stands for the time. And R stands for the simple interest rate. Simple interest rate. Okay. Just remember this equation. You can do simple interest sums. Just you have to subject whatever that they ask, and you can find the values. Let's do some sums there also. So here you have what I equals PTR 100, and I stands for simple interest, and P stands for principal amount, T for time, R for simple interest rate. Let's do a question. So I'll do the first question for you all. First question in page number 13. Look at the first question. First one it says, but Amal takes a loan of 50,000 rupees from a bank for 2 years at a simple interest rate of 12%. Part 1, find the total interest amount he has to pay for the 2 years. Find the total interest amount he has to pay for the 2 years. Okay, easy. Just put I equals PTRO 100 because they have the principal interest amount. Sorry, they have the principal amount. They give the principal amount here, and they have given the amount of years also and the rate. They are asking for the simple interest rate after 2 years. Principal amount is what? The main amount here, 50,000. 50,000 into the time here is how much? After 2 years that they're asking. 2 years. So let's put 2. Rate 12% for annually, right? 12% annually. Rate is 12% over 100. Simplify this one. You get 24 times 500, right? Times 500 times 24. The answer is 12,000. So R is 12,000. R is 12,000. So the simple interest rate, the simple interest after 2 years is 12,000 rupees. First question. Now, second question also. Let's do second question also. The second one. Look at second question. It says a person takes a loan on simple interest, promising to settle the loan in 2 years by paying 5,000 rupees. Okay, so he settles the loan in 2 years by paying 5,000 rupees. However, he was only able to settle the loan in 5 years, at which time he had to pay 6,500. Right. So now here what this question, it's a bit tricky, right? Bit tricky. Why is that? Read the question carefully. It's a very good question. Read the question carefully. So he says a person takes a loan on an annual simple interest, promising to settle the loan in 2 years. So he said that he'll settle the loan in 2 years by paying 5,000 rupees. By paying 5,000 rupees. However, he was only able to settle the loan in 5 years. So that means he has taken 3 extra years, in which time he had to pay 6,500. So the interest for the 3 extra years, why 3 extra years? He said that he'll pay the amount within 2 years. He'll pay the amount within 2 years. But he took actually 5 years to pay this. So how much interest that he has incurred? For 3 years extra, the interest has been calculated. So we need to find the interest for 3 years that he had incurred. So he said that he will pay 5,000 within 2 years, but actually he paid 6,500. So actually he paid 6,500. You have to subtract the value that he will have to pay actual. 6,500 he had paid because he got late 3 years. But he said that he'll pay in 2 years. So the amount of that is 5,000. So you can get the extra amount here, 1,500 years. Sorry, but 1,500 rupees interest. And this interest is for 3 extra years. 3 extra years, right? 3 extra years. So interest for 3 years is 1,500. Means what is the interest for 1 year? Divide this 1,500 by 3. So the interest for 1 year then is rupees 500 rupees. 500 rupees. So that's what in the part 1 they say. Part 1 they say to calculate the interest he has paid for a year. So here he has paid an interest amount of 500 rupees. Understood? This is the interest he has to pay for 1 year. Okay, right. Next question. It says, what was the amount he borrowed? Now listen. He said he'll pay the amount from 2 years. Right? But actually, he paid the amount in 5 years. So there's a 3-year gap here, right? There's a 3-year gap here. And we know that the 3-year gap, the interest he has paid for 3-year gap is 1,500. Okay, understood that? And then we calculated the interest for 1 year. Understood? Please listen this, right? Now, here 3-year gap, he has paid 1,500. Right? For this 3-year gap, he had paid 1,500. But for this 2-year gap, what is the interest that he has incurred? Now, from the first year, second year, third year, fourth year, fifth year. Okay. So he paid the 1,500 from this one to this one. So, but these 3 years interest, he has paid 1,500. Now, what happened to the first 2 years? First 2 years also he has to pay interest, right? First 2 years also he has to pay interest. So now interest for the first 2 years, equals the interest for 1 year is 500 rupees, 500 rupees into the first 2 years. 2. The answer is 1,000 rupees. And this 1,000 rupees interest is included in the 5,000. Is included in the 5,000. Is included in the 5,000. So what's the amount that he has borrowed? The amount he borrowed should be 5,000 subtracting this 1,000. Why? Because this 5,000 includes the first 2 years interest also. The first 2 years interest also. So you have to subtract that interest amount to find the amount he borrowed. I hope that you would understand this simple logic. So why you have to think this a bit. 5,000 minus 1,000. Now the amount that he borrowed was 4,000. This is the amount that he borrowed. Second question is a very good question. Sometimes they might ask these type of question in exams because this is a bit like a bit out of the format. You have to think a bit and you have to think out of the box to get the answer for this. But once again, I'll explain it roughly. Now the person, he said that he'll settle the amount for 2 years, but he failed. So he settled it in 5 years. He settled it in 5 years. So there's a 3-year gap. There's a 3-year gap here. 3-year gap. So to find the 3-year gap interest amount that he has paid, you have to subtract this 6,500 by this 5,000. So that you get the 3 extra year interest amount. 3 extra year. Then for 3 years, if the interest is 1,500 means the interest for 1 year, you can divide it by 3 and get the answer as 500. Right? This is the interest for 1 year, 500 rupees. Then the first 2 years, he had an interest, but they didn't include in this one. Why? Because he paid it after 2 years now. So the first 2 years interest is also included in this amount, in this 5,000. In this 5,000. Why? Because it says he promising to settle the loan in 2 years by paying 5,000 in 2 years. So we have to add that, but we have to subtract that interest amount within the 2 years also to find the amount he borrowed. So we can subtract 5,000 minus the interest for the first 2 years. For the first 2 years interest is how much? The interest of 1 year is 500 into 2 for the first 2 years. So you can get the interest for the first 2 years as 1,000, and this 1,000 is included in this 5,000. So to find the amount he borrowed, we can subtract 1,000 from this 5,000 so that we get the real amount that he borrowed is 4,000. I hope that it is clear. And if you have any questions, please ask. Please ask in the chat. So simple interest sums also, they ask in questions normally. Normally, I've seen simple interest sums, they ask mostly in part 1. Mostly in part 1, sometimes in part A, sometimes in part B. So simple interest is a very important sector here. Okay, right? Okay. So I hope that you understood this one. Please comment in the chat because I don't see no one answering the chat. So I think that you all have understood all of this. But if you don't understand, please ask. Please ask. So you can ask questions in the WhatsApp group, no problem. But mainly ask the chat also, so that I can see the questions and I can comment on it and explain the doubts. Okay, no questions. So that's the end of grade 10 percentages. Just a small part that we covered because since it's a percentage free seminar, so I can't go more deeply into theory because I can't explain all the theory stuff here because in the seminar, so I will do grade 11 ones as well. Grade 10 percentage ones have been finished. Yes, understood. Good. Majid, understood. Okay. So I hope that you would understood this part because it's grade 10, but grade 10 percentages are a main important part in your O-level exams because they have grade 10 in the percentage sums in part 1, and in part 2 they ask for mainly grade 11 percentage sums. So both percentage sums are important because like percentages is a huge lesson, so I can't explain everything in this seminar, but I tried my best to understand, but like to make her understand in each of these lessons. So we discussed in grade 10 percentages. So these were the parts that we covered. So first one we did income tax, right? Then we did rates. Then we did customs duty and VAT. Then finally, we did simple interest. So in grade 10 percentages, these things are the only types that they can ask in grade 10, right? So we did some sums as well, and there are a lot of sums. So please do those sums as so please do those sums at home. You have about question number 1 we did, 2 we haven't done, 3 we haven't done, 6 we haven't done, 7 we haven't done, and 9 and 10 we haven't done because I don't have time to explain all the questions. But please do those sums, and if you have any questions, you can like ask me in the group, or sometimes you can also ask me personally by WhatsApp. So I'll answer your questions. Okay. Right. So the grade 10 part is over from there, and the grade 10 students can leave. Grade 11 students remain. Okay. Let's start the grade 11 percentages lesson. Grade 11 percentages. In grade 11 percentages, we mainly study two types, just two types. That's it. Just only two. One, we study about the calculation of interest based on the reducing balance. Based on the reducing balance. Reducing balance. This is the first part that we learn. Then the second part we learn is something called compound interest. Compound interest. So these two are the ones that we learn in grade 11 percentages. Understood? Right. Let's see the two. Grade 11 percentages. So first one is interest calculated based on the reducing balance. This part. Okay. Now let me give us more introduction on what this interest calculated on the reducing balance is. Now I hope that you all have gone to banks to get something for like down payment, or something that we call as what you call hire purchase. Now, for example, you buy a smartphone, right? You buy a smartphone. Now the smartphone, let's say, smartphone, the cost of a smartphone is 500,000. Let's take something like for iPhone 16 or something. I'm not sure. The iPhone 16 or something, 16 Pro. iPhone 16 Pro. I'm not sure about the price, but I think it's 500,000, something like that. Okay. Let's say the cost of this smartphone iPhone 16 Pro is 500,000. But you don't have the entire 500,000 to pay at once. Right? You don't have the entire money of 500,000 to pay at once. So what you do is you go to a leasing company, sorry, but like you go to a bank or you go to somewhere else and you say like I am going to pay So I'm going to pay a small advance amount. So now think that you have only 50,000 rupees. You have only 50,000 rupees. So you say for the smartphone seller that you have only 50,000 rupees. So I'll give an advance amount of 50,000 and the balance 450,000, balance 450,000 rupees. Okay, I'm going to take it from a bank as a loan and I'm going to repay it to you. Right? Listen this. Now you go to the bank to get this loan amount, 400,000. Why? Because the actual price is 500,000 of that phone. You have only 50,000. So you pay the 50,000 as an advance amount. So what's the balance here? 450,000 rupees is the balance. Remaining, you have to pay for the seller. But you don't have that amount. You go to a bank and you borrow 450,000 rupees. Okay. And you say that you will pay this balance amount as an installment. But monthly you will pay as an installment. This amount, right? This balance amount. Now the bank doesn't just say you, okay, you now for example, now the bank gives you 450,000 and you can pay me within like 10 months, 12 months. You can pay me the exact 450,000 itself. The bank won't say. Why? Because they want a profit from this, because they give you 450,000. So they want a profit from that. So they will charge an interest for this. They will charge an interest for this. They will charge interest for this amount because they need a profit to be earned from this one. Right? Now, how is the interest being charged? Based on the reducing balance method. Based on the reducing balance method. And that is what now we are going to learn. Reducing balance. That means, now think your balance at the first month is 450,000. And you say that you will pay the 450,000 in about 10 months as 45,000 rupees per month. So the first month, 45,000 you pay. Right? So for the second month start, you have 450,000 but minus 45,000, which is 405,000 balance. Now the interest is calculated for this amount. Then again you pay the sum of money for the next month. Then again you get the value. Now the balance, look at the balance will reduce. See, so first it was 450,000, then it becomes 405, then it becomes something 300,000, something like that. So the balance will reduce, and based on the reducing balance only, you will get the interest calculated. And that is what we are going to learn in this one. Okay, right. Let's go to the tute, because now you know what this means to calculate the interest based on the reducing balance. Let's go for some equations that you need to understand. Right. Page number 14. So there are some important equations to remember. So these equations you have to remember. Sorry, but you have to remember these equations. And if you don't know these equations, you can't do these sums. That's it. So you have to remember these equations. First one is monthly interest. We'll come to that. So monthly interest equals the monthly loan into monthly interest percentage. So this equation you have to remember. First equation is monthly interest equals the monthly loan into monthly interest percentage. Right? Second one is month units. This also you have to remember. So month units equals the number of installments over 2 into the number of installments plus 1. Means the month units, the number of installments, if I take as n, then so I can write it about n over 2 n plus 1. This is the equation for month units. Then total interest. The total interest equals the monthly interest into month units. So these three equations you have to remember. And if you can't remember, please write it down. And you have to remember this one, because these three equations are the main core concepts of this lesson of reducing balance. Okay. Right. Now, in the interest calculation based on reducing balance, based on the reducing balance, you have two models, just two models that they can ask. It's model 1 and model. So these two models only they can ask from your exams. They won't ask whatever which is out of these models, only these two models. So the secret is you have to memorize these two models as well. It's not easy. Once you practice this, you can do this. Just you have a small pattern to learn here, and once you have the pattern, you can just memorize these ones, and you can answer all type of questions in the reducing balance, because normally reducing balance questions, they are like very rare, like they don't ask much in exams. But in case if they ask from only these two models. Keep in mind, only these two models, no like any other models. First model, they can ask you to find the value of a monthly installment. They can ask you to find the value of a monthly installment. This is the first model. So what if they ask to find the value of a monthly installment? So it belongs to the first model. If they ask to find the value of a monthly installment, so it belongs to the first model. Second model means what? They will ask you to find the interest rate. Now, if they ask to find the interest rate, so it belongs to second model. Okay. First model, you have some points, remember, steps. And these steps, you have to go in order. First one, you have to find the balance loan remaining. Second one, you have to find the monthly loan. We'll do questions, so but you can understand it. But now you might not understand, but like once we do the questions, you will understand. So just look at this. First one is balance loan, then monthly loan. Then you have to find the monthly interest. Then you have to find the number of month units. Then you have to find the total interest, right? Then you have to find the total amount with the interest. Therefore, you have to find the monthly installment value. This is the steps. So what these are the steps in model 1. You have to remember this part. And model 2. So what model 2, if they ask to find the interest rate, then you have to go for the model 2. Here also same. First two are common. In model 1 and model 2, the first two are common. What is the first two? First one is balance loan, and second one is the monthly loan. So in the first model and the second model, these two are common. These two steps are common. So it's easy for you all to understand and easy for you to remember. Now the third step here is different. In model 2, it's total interest paid. The total interest paid. Then you have to find the number of units, month units. Now here also month units, right? Month units. Here also the fourth one is common. Fourth one in this one is also number of month units. The fourth one here is also number of month units. Here also it's common. Fourth. Fifth one is the monthly interest. The monthly interest. Then sixth one is the monthly interest percentage. You have to find the monthly interest percentage. You have to find, and therefore you can find the annual interest percentage. So these are 7 steps in both the models. So for ease, you can remember the first 2 steps in both the models are what balance loan and monthly loan. So these 2 steps are common for both the models. And the fourth one is also common. The fourth one is but number of month units. Here also the fourth one is number of months, right? So these 2 are the models that we are going to study. And now let's do some questions so that you can understand each of these individually. Okay. Now at first I know like some of you all like won't understand this at first, like how to remember this and all questions, but you can understand this once we do questions. Let's do first model example. Now this example is on a model 1, right? First model. Carefully listen. First model. Now what's the first model? First model is like if they say to find the value of a monthly installment. Now see the question, huh? So first example says a television price at 25,000 can be purchased by making a down payment of 7,000 and paying the remainder by 12 equal monthly installments. Okay. And if an annual interest rate of 18% is charged on the loan, where the interest is calculated on reducing balance, find the value of a monthly installment. So you can just find the type of the model by this last sentence. Now the last sentence say, find the value of a monthly installment in what? It's the first one. Understood? Now look at the second model. Second model example. Second model example. The following advertisement was displayed in a shop. So they say what like washing machine worth 30,000 is available for a down payment of 5,000, then my monthly installment of 2,720. If the interest on the loan was calculated on the reducing balance, calculate the annual interest rate. Yeah. See the last sentence. Calculate the annual interest rate. They say interest rate to calculate interest rate. That means the second model. So always look at the last sentence and choose which model you have to follow. Understood? Right. Now, but now in this example, it's the first model. Why? Because they say find the value of the monthly installment. That means the first one. Now in the second example, they say find the interest rate. Interest rate means the second model. Let's see the first model example and the steps how to do that. Now, let's read the first part. Model 1 example. They say about a television price at 25,000 can be purchased by making a down payment of 7,000 and paying the remainder by 12 equal monthly installments. Right. Now, first highlight the price of 25,000. The price of the TV is 25,000. This is the first point. Right. This is the first point. The price of the TV is 25,000. Highlight this part. Once you highlight this part, then follow the steps in the first model. We have 7 steps in the first model. Follow the exact sequence of the steps of the model. Let's see. There are 7 steps here. The first part is the balance loan remaining. Balance remaining. The balance loan remaining. Now, what's the balance loan? The price of the TV is 25,000. The price of the TV is 25,000. Now the question says he made a down payment. So what down payment in what? He gave an advance payment of 7,000. He gave an advance payment of 7,000. He gave an advance of 7,000. Means what is the balance that he had to pay? 25,000 subtract 7,000. The answer is how much? 18,000 rupees. This is the first step of model 1. Now follow the second step of the model. Second step of the model is what? Model 1, second step. To find the monthly loan. To find the monthly loan. Find what monthly loan equals. So we have the balance loan here, right? Now in the question look, they say he makes a down payment of 7,000 and paying the remainder by 12 equal monthly installments. That means he paid this amount in 12 months. He paid this amount. He paid the balance amount in 12 months. Means how much does he pay for 1 month? You have divided by 12. What, 18,000 divided by 12 to find the monthly amount. The monthly amount. So what's the answer? For 18,000 divided by 12. 3, 4. 4,000 divided by 3. Sorry. Not 4, right? 6, 3. Yeah, 6, 6, 6. 6 divided by, sorry, but 12 divided by 6 is 3. And 80 divided by 6. No, sorry. 2 and 3, right? 2 and 3. Because you can divide both by 6. 3,000 divided by 2. 3,000 divided by 2. So the monthly loan is how much? 1,500 rupees. This is the amount that he has to pay monthly. Monthly he has to pay 1,500. Look at this. Look at this carefully. And please follow the model steps. Now the second step is also done. We found the monthly loan also. Third step is what? To find the monthly interest. Find the monthly interest. The monthly interest. Now, how to find the monthly interest? Now we don't know. We have 3 equations at first that we saw. Now these 3 equations that we saw, and I have but highlighted these 3 equations also, but important equations. Remember, in this you have the equation of monthly interest. So what's the equation for monthly interest? It is monthly loan times monthly interest percentage. Like that. Monthly loan into the monthly interest percentage. So what's the monthly loan here? We found monthly loan, right? 1,500. Now, what is the monthly interest percentage? They have not given us the monthly interest percentage, but they have given us the annual interest rate of 18%. Now, this 18% is for 1 year, but we need this for 1 month. The monthly interest percentage we need, not the yearly one. So, how to convert this into a monthly, but like monthly interest percentage? You have divided this by 12. You have divide this by 12. Divide this by 12. Divide this percentage by 12. So you can take this, what is annual interest percentage, divide by 12 will give you the monthly interest percentage. I hope I hope it's understood. Right? Then you can find this answer. Again, 2, 3 here. 1,500 times 3 over 200. 2 zeros cancels. Then 45 over 2, which is 22.5 rupees. So the monthly interest is for 22.5 rupees. Then the fourth step. What's the fourth step here? Fourth step is to find the month units. Find the month units. Fourth step is to find the month units. So that equation also we have given, but n over 2 and n plus 1 into n plus 1. Here we have this equation here. Month units equals n over 2, number of installments over 2 into number of installments plus 1, n over 2 n plus 1. So in the question they say, but in how many installments that they pay? In 12 equally monthly installments. So but n equals 12 here. 12 over 2, 12 plus 1. So we can get 6 times 13. The answer is, I think, 78. Yeah, 78. Yeah, 70 is the answer. For the fourth part. Then the fifth step. Fifth step is what? The total interest paid. The total interest paid. The total interest paid. Now, how to find the total interest paid? For that also, we had an equation. Here you have the total interest equals the monthly interest into month units. The monthly interest into the month units. The monthly interest into the month units. The monthly interest into month units. That means the third one into fourth one. So here the monthly interest, how much we found? It's 22.5 rupees. Into the number of month units, we found it as 78. So the total interest that he has to pay is how much? It's 1,755. It's 1,755. 1,755 rupees. The total interest he has to pay. Right? Then the sixth step. Sixth step say what? The total amount with interest to be paid. Now this is the total interest only. Now we have to find the total amount of the the total amount of the balance loan with the interest. Total amount with the interest. That is the balance loan. How much is it? What, 18,000 rupees plus this total interest, which is 1,755. Here you get the answer as 19,755, and this is the total amount that he has to pay with the interest. With the interest he has to pay. That means this one plus this one. The balance loan plus the total interest part is this. Okay. Last step. So last step I'll write it here. There's no space. Last step is seventh one. Last one is what? New value of the monthly installment. So the new value of the monthly installment. How much? You need to take this total amount with the interest. Total amount with the interest. How much is that? It's 19,755 and divide it by how many months? 12 months. 12 equal months. So you have to divide this by 12 equal months. Now you can get the installment with the interest per month. With the interest per month. And that is what we call as the monthly installment. Monthly installment. So you can divide this and see the answer will be 1,646. 1,646.25 rupees. This is the value of the monthly installment. Now we did this one in 7 steps. 1, 2, 3, 4, 5, 6, 7. So these 7 steps you need to do exactly if they ask the first model. So you have to remember these points in the model. Now in the model 1, they asked to find the value of a monthly installment. So to find the value of a monthly installment, we did 7 steps in the model 1. Okay. So I hope that you understood this one. Yes, I know it might be a bit complex, but the only thing that you need to do is to memorize the format of these 2 models. Once you have been memorized these 2 formats, it's very easy to do questions. That's the first model. So do you have questions regarding the first model? First model questions we have, like how to do this one or stuff, or like whatever questions that you need to ask, you can ask it now before going to model 2. Just these 2 models, that's it. In this particular lesson of reducing balance, interest calculation, just these 2 models, no other model, just these 2. Okay, seems like no questions. Yes, seems like no questions. Okay, so you can see that in the tute as well. So I've done the same exam with the tute. So you can follow the tute as well to find the values and stuff. Okay, and the model, please remember, you have to remember the exact steps, the number of per month units, the total interest, the total amount, and therefore the new monthly installment. Those things you have to but remember it has exact steps, and also you have to remember these three equations as well. Right. Second model example. Now let's go with second model. Right. Model 2. Look at the question. It says the following advertisement was displayed in a shop. It says what a washing machine worth 30,000 is what available for a down payment of 5,000 and 10 equal monthly installment 2020. If the interest on the loan was calculated on the reducing loan balance, calculate the interest rate. So you have to calculate the interest rate. So it belongs to the second model. You have to calculate the interest rate. Again, right? The price of the washing machine. The price of the washing machine. Price of the washing machine is 30,000. 30,000. The price of the washing machine is 30,000. Then you have to follow the model. This belongs to model number 2. Let's follow the steps. First one is what? The balance loan remaining. So the first two steps, it's common, I said. So first one is balance loan remaining. Right. So he paid 5,000 as a down payment, and the price is 30,000. So what's the balance remaining? The 30,000 price, you subtract it by the down payment that he paid, 5,000. What's the answer? 25,000. 25,000. Then the second step is what? To calculate the monthly loan. To calculate the monthly loan. So monthly loan is what? We have done that also. Monthly loan equals this balance, you divide it by the number of months that he is going to pay. So he pays that in what? 10 equal monthly installments. So the monthly loan is 2,500 rupees. 2,500 rupees. Third step of model 2. Third step is what? To find the total interest paid. Now it's a new part. The total interest paid. The total interest paid. Now, to find the total interest paid. Now, they are given. Now, look at the question. They say he paid for down payment of 5,000 and 10 equal monthly installments of 2,720. Now, this value they have given in model 2 is the value of a monthly installment with the interest. With the interest. Okay, this is the value of a monthly installment with the interest. Now, what we calculated here as monthly loan equals 2,500 is without the interest. This is the value of the monthly loan, but without the interest. So, what is the interest of per month? You have to subtract this 2,720 minus this 2,500. This is the interest per month. Per month. Now he pays this in how much? In 10 equal monthly installments. That means to find the total interest in 10 months, you have to multiply this by 10. I hope that you understood this part. This part is the monthly interest per month. Per month, how much interest? And here in the question it says he pays it for 10 equal monthly installments. So we can find the total interest for 10 months that he's going to pay. Understood, right? Now you subtract this value, you get 220 times 10. The answer is 2200, and this is the total interest paid. The total interest paid is the third step. Look carefully. The fourth one, the fourth step. The fourth step is what? The number of month units. Month units. That is what? N over 2 times n plus 1. So what is n here? The number of installments, right? 10. So he pays that in 10 equal monthly installments. So what? 10 over 2 into 10 plus 1. So 10 over 2 is 5 and 10 plus 1 is 11. Answer is 55. The month units is 55. Fifth step is the monthly interest. Monthly interest. Now in this case, in this model, in this model of second model, how to find the monthly interest? You can subject the monthly interest by dividing the total interest by the month units. Why is that? Now we learned this equation. We learned this equation. The total interest equals the monthly interest into month units. Now in this step, we have to find the monthly interest. So to find the monthly interest here, we have to subject the monthly interest part so that we can get total interest over the number of month units. Understood? Right. Now here, so what's the total interest? We found it, 2001. And what's the month unit? 55. You can divide this. The answer will be 40. So the monthly interest is 40 rupees. The monthly interest is 40 rupees. Right? Sixth step. Then we have to find the monthly interest percentage. The monthly interest percentage. How to find the monthly interest percentage? The same thing. We have this equation here. This equation, which is the monthly interest equals the monthly loan into monthly interest percentage. Now we have to find the monthly interest percentage. So subject monthly interest percentage. Subject monthly interest percentage. So that you will get what? Monthly interest over the monthly loan. And remember, since we are finding a percentage here, you have to multiply this by 100. Okay? Right. Now, what is the monthly interest here? 40 rupees. And what's the monthly loan here? The monthly loan here is 2,500 into 100. Now, simplify this. 0, 0 cancels. So the answer will be 40 over 25. That is 8 over 5, which is, I think, 1.6%. Yeah, 1.6%. And that is the monthly interest percentage. But what they're asking? They ask for calculate the annual interest rate, the annual part, not monthly. Now, how to find the annual interest rate? We have the monthly rate, which is 1.6, multiplied by 12 to find the annual interest rate. You get the answer as, I think, 19.2%. 19.2% is the answer. So this is the annual interest percentage, 19.2%. And that's what they ask. Right? So calculate the annual interest rate. Yeah. They ask for the annual interest rate. and that we are found. Now again, this second model also, you have to do these steps properly. And in the same sequence, you have to do the steps. Once you do in the same sequence, you can do all sort of questions in both the models, because but this model 1 and model 2 only comes for exams, and those two only they can ask in exams as well. So I hope that you understood this as well. But we'll do the questions of these two after we do compound interest, because I have only 30 minutes more. So I have to finish the theory part of both 10 and 11. So grade 10 theory parts have done. Now, last part of the grade 1 theory part is compound interest. And after I've done that also, I'll give questions. You can do the questions. Okay, so can you understand this? And if you have any questions, please ask me through the chat. And if you don't have questions, we can move on to the compound interest part. Okay, I think it's clear. Right. We can move to compound interest next. Compound interest. To conclude, page number 17. Compound interest. So in some cases, when a sum of money is borrowed or deposited in the bank, the interest calculated every year is added to the previous balance of the bank account so that it is accumulated annually. Okay. Now, what do you mean by this? Now look at this table. Now think that you went to a bank. Now say you went to commercial bank, and on January 1st of 2013, you deposited a cash deposit of 25,000. Okay, you deposited 25,000 on January 1st. Now what happens? So once you deposit this amount, you get an interest. You get interest, but at the end of the year. So but at 12/31, that means on December 31st of 2013, you have the interest which they give you, and that is 2,500. Right? Now what happens? For the next year, this interest amount will get added to this cash deposit amount. This interest amount will get added to this cash deposit amount, so that for the starting balance of the next year, you have this one plus this one plus this one as the starting balance, which is 27,500. 25,000 plus 2,500 is 27,500, and that is the starting balance for the next year's January 1st. Right? And then you have this balance throughout the entire year. And at the year end, but again you have a certain interest. Let's say you have for 2,750 again. Now what happens? Now at the end of the year, you get this interest amount. Now this amount will be added to this balance, and it will go as a new balance for the next year. Here it's about 20,500 plus 2,050 will go as 30,250 as the new balance for the next year, which is 2015 January 1st. Okay. Then what happens? So, but at the end of the year, now again you get an interest. Now, same thing. For 2016 starting balance, this one plus this one will be the new balance, which is 33,275. So this is how the compound interest works. So the interest will get added to your previous balance and make the new balance for the next year. And that goes on for how many amount of years that you are depositing. Right? Okay. Let's do the next part. So here you have a common formula for compound interest calculations. Sorry, the formula is here. The formula should be here. I mean, this is the formula here. So it should come up. I have mistakenly put it down. No problem. So the common formula for compound interest calculations. So that formula is in page number 19. You can see that. So I've like highlighted that part. The total amount with compound interest for a amount of years is the initial amount into compound interest rate plus 100 over 100 to the power n. Don't worry because I'll explain this one. What is it? Let's do the example first. Right? Now look at the example. Now the example says, but if a person takes a loan for 200,000 at a yearly compound interest, yearly what compound interest rate of 10%, then calculate the total amount he has to pay after 3 years. After 3 years, you have to calculate the total amount he has to pay after 3 years. Now see this, starting balance is 200,000. He took 200,000. Then the interest for the first year is 200,000 into 10 over 100. Why? Because the compound interest rate is 10%. So 10%. So the interest for the first year is 20,000. Now what happens? For the new balance for the next year, you have to take this amount and add it with this interest for the first year. So it becomes 220,000. Then the interest for the second year, what happens? You have to take this new balance now, 220,000. 220,000. And that into 10% will be the interest for the second year, which is 22,000. Then the new balance for the second year will be this 220,000 plus this 22,000 for the interest of the second year. Now you have the new balance again, 242,000. Now for third year same. Now the new balance is 242,000. So 242,000 into the compound interest percentage is 10%. So you can find the interest for the third year. It's 24,200. It's 24,200. Now the new balance is 242,000 plus this third year interest. Now you get 266,200, and this is the total amount to be paid after 3 years. After 3 years in a compound interest fashion. Because they say what this interest is, but interest compound interest. Now, but before we studied about simple interest, right? Now, but in simple interest, you didn't have but this interest which is getting added to the next balance and stuff. You just have the interest percentage and you have the interest. That's it. Now in this one, so it gets compounded, means it gets added to the balance after, so that you get a full balance with the interest for the next year. Understood? Okay. Now they ask us to calculate the total amount he has to pay after 3 years. The total amount he has to pay after 3 years, we found it. Now this one we have to do a long procedure, but there is a short method, very short method. So that short method is this box which I've highlighted. How is it? The total amount he has to pay for certain amount of years. We can find it through this formula. The total amount with compound interest for n number of years equals the initial amount into compound interest rate plus 100 over 100 to the power n. Now look at this. The total amount to pay after n number of years, equals, what is the initial amount here? He says the person takes a loan for 200,000. That's the initial amount. 200,000 into what is the compound interest rate now? They say it's 10%, and this 10% gets added. So we have to take 10 plus 100 over 100. 10 plus 100 over 100 to find percentage. Okay. So 10% will be getting added for this one. So we have to plus 100 here over 100. Now this is for 1 year. No? Now they say to calculate the total amount he has to pay after 3 years. After 3 years. So how many years here? 3 years. So we have to put to the power 3. Now if they ask 4 years, then you have to put to the power 4. Right now, if they ask something like 10 years means to the power 10. Understood? Now they are asked here to pay for 3 years. Means to the power 3. Now simplify this. 200,000 into 100 plus 10 is 110 over 100. This is 1 to the power 1 into 110 over 100 into 110 over 100. Why? Because we have 110 over 100 to the power 3. Means 3 times you have to multiply this. Understood? Now we can cancel zeros. 2 zeros cancels. 2 zeros get cancels. This 1 0 get cancelled from here. Then the next 0 get cancelled from here. You multiply this amount, which is 2 times 110 into 110 into 111. Sorry, into 11. You get the same answer as 266,000. 200, right? Yeah, 266,200 rupees. You multiply this and see, you get the same amount. Total amount to pay after 3 years is this amount. First, you have to take the initial amount and you have to multiply it with the compound interest rate plus 100 over 100 to the power of number of years. To the power of number of years. And then you can simplify this one. You got the answer. And this is the total amount to pay after 3 years. Short method. Without doing all these steps here, you can at once, you can get the answer by doing this method, by having this formula. So we have the initial amount into compound interest rate plus 100 over 100 to the power of n number of years. I hope it's understood. Please, if you have any questions, please mention in the comments if you have questions. Okay, no questions, I seems. Fine. Now you can do questions in grade 11 percentages because we have finished here. Okay. So since we have only 15 minutes more, let's do a reducing balance question because compound interest question is not that difficult. Let's do one question reducing balance and then we can finish it off. Okay, so do the third question. So you can do the third question. Just the third question only because we have only 15 minutes more. Just do a third question and I'll give you about 6 minutes to do. And the third question is based on the reducing balance. So, okay, start. You can start. Right. So I hope that you have finished this. Let's discuss the third question. So, what as I said, the third question is from reducing balance. Okay, let's discuss that. Okay. Third question, it says, what a television is priced at 45,000 and a person who buys it for outright cash receives a discount of 6%. Okay. And a person going for an installment plan can make a down payment of 9,000. Okay. So he pays a down payment of 9,000 and pay the remainder in 12 monthly installments. And a 24% annual interest rate is charged on the loan, where the interest is calculated on the reducing balance. Right. So it's calculated on the reducing balance. A part. It says, what is the total amount paid if the TV is bought outright for cash? Now they say, what if the TV is bought but directly for cash? There's a discount of 6% that they give. Right. The amount he has to pay if he buys the TV with cash is, they say, 45,000 rupees, and he receives a discount of 6%. So after the discount, what is the price that he has to give? So how do you find that value? You subtract, because discount means you have to subtract how much? 6%. 100 minus 6 over 100. So that you can find this value after the discount of 6%. 45,000 into 100 minus 6, 94 over 100. I cancel zeros. The answer will be 42,500. So this is the value he has to pay for the TV after the discount of 6%. After the discount of 6%. Right? Okay. B part. So we have write the price of the TV, right? The price of the TV. I forgot that. Price of the TV is 45,000. Just mark them. B part. What is the total amount paid if the TV is bought on an installment plan? Now, which model is this? They're asking, what is the total amount paid? What is the total amount paid if the TV is bought on an installment plan? So, are they asking about a rate or something? No, right? They ask about the installment, right? About installment. What is the total amount paid if the TV is bought on an installment plan? Now, installment plan means they are asking for the installment value. Which model is this? 1 or 2? Second model. Sorry, first model. First model. So it's the first model. Right? First model. Balance remain. The balance remain. So they say the price of it is 45,000. And if you go for installment plan, he pays an advance amount of how much? 9,000. He pays the advance amount of 9,000. So the balance remaining is 36,000 rupees. Is the first step in model 1. Second step is what? To find the monthly loan. The monthly loan. To find the monthly loan, we have to take the balance remaining, these 36,000, and divide by the number of months that he's going to pay. So he pays that in 12 equal monthly installments. 12 equal monthly installments. Divide that by 12. The answer will be 3,000. 3,000 rupees, the monthly loan. Third one. First step is the balance remaining. Second step is the monthly loan. So what's the third step of the model one? It's a monthly interest percentage. The monthly interest percentage. So how to find the monthly interest percentage? You take the monthly loan and you multiply that. Sorry, you have to find the monthly interest. Sorry, the monthly interest. So take the monthly loan and you multiply that by the monthly interest percentage. You have this equation at top. At the top, you have this equation. So monthly loan is how much? 3,000 times the monthly interest percentage. But here they have given 24% is the annual interest rate. So we have to convert this into monthly interest rate. How do that one? You take 24%, which is the annual rate, and divide it by 12 to make it as monthly interest rate. Then you can find this value. You can get this as 60 rupees. So the monthly interest rate is 60 rupees. The monthly interest is 60 rupees. Then the fourth step is to find the number of units or month units. Let's say month units. The number of month units. Month units. That is what? N over 2 and N plus 1. So what is in here? He pays it for 12 months. So 12 over 2, 12 plus 1 is 30. Right? But 12 plus 1 is 30. Advance I wrote. So the answer is what? 6 into 13, 78 month units. 78 month units. Month units. In the fifth step. Total interest. The total interest. You have to find that. So how do you find the total interest? The monthly interest, you have to multiply by monthly units. The monthly interest, you have to multiply it by the monthly units. The monthly interest is 60 rupees. The number of monthly units is 78. What's the answer? 60 times 78. Answer is 4,680 rupees. 4,680 rupees is the total interest. Then sixth step. The total balance he has to pay. Sorry, the total amount he has to pay, not the balance. The total amount he has to pay. What? This balance remaining 36,000 plus this total interest 4,608. So why it will give you 40,680. 40,680 rupees. 40,680 rupees. Then last one. That's it, right? So what they are asking about what is the total amount paid if the TV is bought on an installment plan. So they are asking for the total amount. That's it. Finished. So we don't need to find the monthly installment and stuff because they don't ask for that. So they ask from this one and stop it. That's it. So that's it. So what's the answer? 40,680. Why? Because they ask B part. What is the total amount paid if the TV is bought on an installment plan? What is the total amount paid? The total amount paid. So you have this balance plus this total interest amount. That's it. You don't need to divide and find the monthly by installment plan because they haven't asked for that. Understood? Right. So I hope that you understood this one. Now the last part, C part. C part, they say, but how profitable is to buy the TV outright for cash than on installment plan? So how much is the price of the TV when he buys it in cash? We saw it was 2,500 as I can remember. 42,300, right? 42,300, yeah, 42,300. 42,300. So the amount he paid in cash. The amount he paid in cash. Sorry, he has to pay in cash. The amount he has to pay in cash. To pay in cash is 42,300 rupees. And the amount he has to pay in installment plan. Installment plan. How much is that? 40,680. 40,680. So which is more profitable? The amount he has to pay in cash or the amount he has to pay in installment wise? Which is more profitable? The amount he has to pay in installment plan. Wait, how profitable is it to buy the TV outright for cash than on installment plan? Yes, I forgot one part. Why? Why this 9,000? He already have paid, right? He already have paid 9,000. So you have to add another 9,000 for this. Why? Because this one is the total amount with the interest, and already 9,000 he have paid as advance. Yeah. He has paid but 9,000 advance. So the total amount that he has to pay like after that is 40,680. 40,680 plus the advance amount that he paid. So what's the total amount? 680, 49,680. Right. 49,680. So this is the total amount he has to pay in installment plan if he's going to pay. Now, which is profitable? You can see that. Now, here you have to pay only 42,300 if you pay in cash at once. But if you go for installment plan, you have to pay 49,680, which is more profitable. The amount he has to pay in cash. Right? So, how much is the profit when he pays in cash than in the installment plan? You have to subtract 49,680 minus 42,300. You can get the answer. So the answer will be 7,080 rupees profit. So he will save 7,080 rupees. So this person will be saving 7,080 rupees if he pays in cash at once, then he pays in installment plan. Because installment plan, you have to pay a large amount. Understood? Okay. So we'll do only one question. That's it. And we have done that. And the rest of the questions, now we have a lot of questions, so I can't discuss all the questions now since the time is 1:40 already. So we have missing first question, second, third we discussed. Then we have discussed fourth, fifth, and sixth. Yeah, so the first 1, 2, 4, 5, and 6 questions you can do at home. And if you have any questions, you can ask it in the WhatsApp group, in the WhatsApp group, or you can ask it now as well. Okay. So do you have any questions at last from any of the parts that we studied today? So we studied grade 10 parts and grade 11 parts also we have finished. And compound interest sums I couldn't do because the time is up now for me, right? So yeah, so that's it. So no questions, right? So how was the session today, children? Was it interesting? Was it good? No, Jazakallah for the explanation. Barakallah. Okay, so how was session today? Was it effective? Because I had to summarize the entire grade 10 and 11, so I couldn't go deep into every topic. I just rushed with each and every topic quickly, but I ensured to do sums as well. Okay, so we'll meet in another session. And since we have completed grade 10 and 11 but percentages, and I hope that you understood percentages to a certain extent at least, or fully, because we couldn't discuss a lot of questions. I'm but like, I mean, I regret a lot because I could discuss a lot of questions. So, but I have a lot of questions. So in future ones, uh, let's do a lot of sessions, right? So in future also I'll be but conducting free seminars. So be in touch with the group. Uh, and that's it. Let's point it off. And thank you for having session. Okay, children. Thank you.